Welcome, everybody. Delighted to have Kwasi Ampofo with me. He was a speaker today in the resources conference we had here in Frankfurt. Kwasi, thanks for giving us some time.
Thank you so much for having me.
Absolute pleasure. And you're also at the Bloomberg building in London, very close to my heart. I walked past it at Cannon Street many, many times.
I personally think it's the most amazing building on earth.
It is.
Well, hopefully, maybe if I put up something in my building later, it might be the most amazing. But for now, since I don't have anything yet, that is the most amazing building on earth.
Excellent. Yeah, I love that analogy, by the way. They built on an archaeological site, didn't they? They delayed it coming out because there were some special finds.
I know.
You've got to let the
archaeologists say, yeah, Roman ruins, it's quite a significant amount of them were found, and they've preserved some of them, actually. So I think for your audience, yes, whenever you are in London, pass by the Bloomberg office, you get to learn about our research. Then you also get to see some beautiful archaeological sites as well beneath the building, and it's open to the public.
It is pretty cool. That it does make for, if they do it respectfully, it does make for quite a nice feature in a building. I wouldn't mind actually seeing that now it's finished. Anyway, back to business, I suppose, in a sense. Having just spoken, first of all, you've got some real experience in what I call the green minerals that we need for battery and future. There's this tribalism in energy I kind of mentioned. You're either in the camp that, green energy's turned out a damn squid, but actually the middle road position seems to be we're going to have a portfolio of a more broader family of energies. Give us your take. What should everybody watching this think about certain energy resources in that space?
Yeah, so I think for me, it's in my PhD, one of my focus areas was how innovation evolves, right? And one of the interesting theories that I picked up was the fact that every innovation goes through three waves, right? So you obviously get the first wave where it's policy driven, or I would say politics driven.
Yeah.
So for example, in the instance of electric vehicles, there are those that believe in it because they focus on, okay, is it green? Is it this? I'm for that. I'm against this, I'm for that. So, and it's also that period where government has to intervene significantly to support that innovation to grow, right? And the whole EV market is currently in that phase where there's a lot of focus and emphasis on the policy and the politics.
Yeah.
Now, the next phase is that beyond that is where the cost competitiveness comes in, the price parity, the cost parity, right? People now adopt that technology because it's just a cheaper product.
Yeah.
Right. And I think over the next decade, in the 2030s, we're going to see a lot of electric vehicles actually become cheaper than the incumbent internal combustion engine. Then it stopped becoming a political policy product into a cheaper product. But there's also a third phase, Francis.
Yeah.
It's where I call the phase where it's just simply good product.
Yeah.
So that's the phase where for a city like Frankfurt, where we are in, we realize that you drive an internal combustion engine, you've got the engine making all the noises, the emissions coming there, then the city decides, okay, electric vehicle is quiet, is superior, has a better feel. Why don't we as a city just adopt electric vehicles? Because it's quiet and it reduces the emission in the city, right? And same for the retail users as well. People sit in their first Tesla or any other electric vehicle, Volkswagen, and they realize that it's just a superior product. You're telling me that I can actually save on fuel, I can actually have a much more digital feature. And I think that will be the last phase of adoption where we see even a much more higher mass adoption. So one, politics, that's where most of the products are stuck in now. But then once it becomes cost competitive, it doesn't become an issue of whether you love the environment more or less. It's just cheaper. And then the final part is people just realize that it's a superior product. And we saw the same thing happen over a century ago with the internal combustion engine replacing the horse carriage.
It's funny you mentioned that. I have a gentleman I follow on Twitter, and he was showing one particular New York street. I think it was 1913, and everything was a horse-drawn carriage. And then he said 13 years later, and everything was a vehicle on the road. And it was just almost like you needed that decade and a half to pivot. I mean, I kind of put myself, sometimes I put myself in the old world school right now by preference. But I think that's because I often feel first generation products are not the winning product. They're the beginning of the process rather than the end. And too many people maybe jump to judgments and on the initial effort rather than the trajectory or the trend.
Correct. And you can say same for even the social media, like, or Gmail. Would Gmail replace post office? Post office will find a role, right? But then it will just not be in the world, And look, don't get me wrong. You still see horses. I mean, I don't know if you've ever been to Durban, July. I mean, most of us are common, all the ascots in the UK. You still see horses. They're still there. They didn't go extinct, right? But they just found a different use case, right? And so I don't think one technology can totally displace and replace another. It's just, it finds a new use case, and society evolves with that.
What are the key must-haves for this technology to continue to advance from your research? I mean, we hear a lot about rare earth minerals, and China's captured the market, and there's lots of stories and tales, etc., etc. What do they need if they want to do more of this in terms of going into the ground? So where's the opportunities for investors in mining potentially?
Yeah, so I think investors, the opportunity varies. It's a bit more complex, and I think it was part of the talk I gave today, is that if you, for example, 100 years ago took an investment position, or if took exposure to a steel investment, the probability that the steel industry's technology would evolve is very low. We've produced steel the same way we've done over the last 100 years. Some steel mills have existed literally over a century in the US, right? But then with batteries, even the last 5 years, the technologies that were dominant have evolved, right? And what that means is that if you, for example, assume that cobalt will be the dominant, there was a time where it was the most expensive metal in the battery. Now cobalt's demand from batteries are actually halved because of technology advancements, right? So it's quite important that you don't just understand the supply, you understand the demand to get a full picture, and to also probably extract value out of your investment. So in terms of specific exposures, so we actually run the numbers on which of the commodities would have the highest exposure in terms of demand for the energy transition. And then copper came out number one. Since from a value perspective, we would need to produce and sell copper the most if we have a shot at actually reducing our emissions through renewable energy technology, so copper. And then next to it, you had a metal like aluminum, and then you had lithium, and then from lithium, the list goes on and on and on down to manganese, right? So
I've got a lot of silver bulls.
No,
to what extent is silver needed?
No, so silver actually also plays a key role. Yeah. So we actually classify our Bloomberg NEF silver as an energy transition metal, because of the role it plays in solar panels. So anytime you drive past a solar panel, please give Dr. Silver a wave, because it plays a key role in the paste that is used to actually patch together the PV modules, right? So silver does play a key role. So we are forecasting significant demand in solar penetration in regions like China, the US and Europe. And what that means is that it's also going to add to a totally new demand market for silver as well.
Yeah, great. So quite a few things actually getting the upside there. And how did you feel about the rare earth minerals? I mean, has one nation captivated it, or are we going to be finding that, or is it going to be less important? Because a lot of people talk about that particular aspect.
Yeah, so the reason, rightly so, right? So I would actually tell you why rare earth is a big headache for policymakers. There are about 9 metals or minerals we look at and classify them as energy transition raw materials. Out of that 9, at the refinery level, China pretty much controls all of it, with the exception of platinum. But then at the mining level, there's quite some broad, China controls about 2, Australia will control some, South Africa will control platinum and all that. The only 2 metals where China controls both the upstream and the downstream is graphite and rare earth. So that is why policymakers...
Can you say that again? Graphite and?
And the rare earth.
Rare earth, the rare earths, yes.
Rare earths,
Got you, sorry. That's the one we're talking about.
Yes. So it's actually, its concentration, or it's concentrated both at the upstream and the downstream by one country.
Yeah.
That is what makes it a headache for policymakers. As to whether companies can simply out-innovate rare earth out of technologies like permanent magnets, it's not a conversation that started today or yesterday. For almost I would say 50 years since consumer electronics became a day-to-day thing, or since fighter jets became a big part of defense, companies have been looking at out innovating rare earths out of these technologies.
And they haven't been able to do it.
They've not been successful at all.
Okay, so we've got to grow up in this space, understanding that one nation does control a pretty important component, both on the upstream and the downstream, as you said. Yeah. Okay. So that's a potential national point of interesting politics as well.
It is.
And do you get price discovery at that level? Is it possible that, I mean, we could speculate, but maybe China could put the prices up in that particular medium? If you control it, it might be in their interests from a profiteering point of view. Would that lead to potentially concerns for the other nations?
No, absolutely. And then I think it's important for your audience to probably, let me take it down to price discovery, the fundamentals of it, right? So initially, if you and I are the only two actors in a commodity, so I'm the producer, you're the buyer.
Yeah.
The way we set prices is that at the beginning of the year or at the beginning of the day, I come to you, I'm selling it at $20. And you said, okay, we cannot give you $20, we'll give you 10. All right, how about 15?
Yeah.
We shake hands, we both walk away, right?
Yeah.
But then down the line, two people want the same product. So then rather than me coming to you, we're bringing a third party price benchmarking or aggregator or whatever role it is to now talk to the two of you and find out what price you're willing to pay. And that becomes a benchmark price, right? Then the market becomes bigger, 3, 4, 20 people. Then you have to go on an exchange to discover prices. At the moment, for the rare earth industry, it's still a very concentrated product among few familiar producers. I think in China, 3 or 4 years ago, they actually consolidated the whole rare earth industry to two broad north and south companies. So price discovery is still quite in its early stages,
yes,
right? Which gives or opens room for things around manipulation and lack of transparency. And it could happen anywhere else in the world when you have few actors within one.
Well, it feels like the new OPEC as a potential. You might have to, that's why I just raised it as a potential concern.
How do we, I'm trying to think of the acronym if it was rare earth. I can't take up any. But then it becomes sort of a weapon, right? If 2 or 3 companies can decide which direction of travel or which velocity of travel prices go to, right? Then I think that's a concern for most Western economies as to what then happens. Because if we bring a project online and then someone can detect prices at a low point, so our projects are no more economically viable, how do we address that? And the last administration in DC, Washington, were thinking about providing a floor price.
Yeah.
Or even using government stockpile to also support some of these prices. It's still early days, but I'm quite curious what governments would come up with. But then I think the key thing that your audience should know is that these are no normal times when it comes to these commodities. It's a very tough decision. Do you still make the market competitive when 2 or 3 companies can decide which direction prices travel, or you go protectionist in order to protect your companies to compete and break it and diversify the supply chains?
So it's an interesting prioritization. So we had copper at the top of the pile. So let's say we've got an investor audience right here that are sitting and saying, okay, here's my analyst, Kwasi. I'm getting my moment in the sun to speak to him. What does the future look like? How should he invest? Copper mines, potentially, if that's one of the big ones. What else would you do? What would a portfolio person that says, I want to be on the right side of the green revolution, how do I position?
Yeah, so even at the copper mines level, it's quite nuanced, right?
Yes.
You realize that
we had some drama in Panama recently.
Exactly. It's coming to the country risk. Yeah. So every year we do this ranking where we look at countries that can actually play a key role in the downstream side of things, right? So we just published this week on Tuesday, the latest edition. Of course, China is number 1, the supply chain. But then if you narrow it down to issues around countries that have friendly policies to mining, some jurisdictions in Canada actually came on top, right? Some jurisdictions in Europe are doing a better job, right? We saw the US improve as a result of some of the executive order. So I think it's important that to identify the countries where they support mining. I think that is number 1, regardless of how quality your ore body is. If the country does not want to have mining in there, there's nothing you can do with your investments. The second thing now becomes, you've identified the region, becomes, you also need to look at where are the majors and the industry as a whole willing to deploy cash. We saw the BHP Anglo-American conversation with an acquisition, and the key thing was BHP wanted to increase exposure in Latin America.
Yeah. Which has a lot of copper
yeah,
and silver.
correct.
Yeah.
You take BHP then went and bought, I think, Philo. And so you can see that if you're going into an investment in such a region, there's a probability that there'll be capital activity to obviously support and sustain your investment. So I think it does matter which region you look into. The other part of it is which part of the value chain do you focus on? Okay, there's obviously the very early stage.
Which is the mineral.
The mineral.
Yeah,
exactly.
and what is the late stage? If you wanted to get into the tech, with the close end of the product.
So the close end, even beyond that, so there's a refinery bit, which is heavily concentrated in China. And a lot of governments are looking to deploy capital into breaking that concentration. So there's also the refinery bit, right? There's also another interesting angle to it. Remember when I talked about steel and the fact that the last 100 years, we've actually not evolved in the way we produce steel. So in copper, there are actually companies that are looking to do something new.
Yeah.
So there's also that whole vertical of innovative companies coming out of regions like the US that are trying to rewrite the whole innovation cycle of copper production, right? So I think as an investor, these wildcats could also be of potential interest as to whether, if their technologies succeed, that actually can rewrite history. And we at BNEF, we looked at these things. We have a program called Pioneers, where every year we identify 10 to 20 companies trying to address some of these challenges. And for us, some of the submissions, you look at it and they go like, wow, the future could actually be very beautiful and sustainable at the same time.
That's an interesting overlap of technology and then the resource sector, isn't it? Yeah.
Right. We've not seen that happen in a long time.
Yeah.
Right. Because historically, it was the incumbents, the BHPs and the Rio Tintos that were hoping to disrupt the industry, but it rarely ever happens. It's not actually the Volkswagen that were ever going to give us the first electric vehicle, because they were making their margins on the incumbent technology, right? Correct. It was a whole new startup, Tesla, right? And it's still early days. An example is Cobalt Metals, a private company currently using AI to make big discoveries, right? And at the moment, they've made a copper discovery in Zambia that they are hoping to convert into a producing asset. And so for me, as an investor, it's some of these technology companies, mining companies that could also
I love that
be
point.
An exciting ones.
And you mentioned Zambia. What about our mother continent, Africa? Are we going to start seeing the potential for, well, typically policies have been largely friendly for mining, but it's more been the political stability element that's going to be. Can we see a de-risking premium for Africa, that we start to see some really outside just Southern Africa mining? There are already. I mean, under Ghana, I don't want to downplay it, but will there be a re-rating potentially of Africa? Because it feels like there's a commodity awareness boom going out there. This, not to bring in Donald Trump into the same discussion, it's almost ironic, but in that sense, he's drill. And we've kind of pushed back on the ESG, the DEI, BlackRocky type vibe a little bit. And it's a case of, listen, we still need stuff. If we want to go forward, mining is still a thing. Is that going to ripple through? What do you think for Africa's prospects in mining? Because it would be great to see a bit more going on there.
Yeah, so I think for me, one thing that mining capital fears most is uncertainty.
Yeah, risk aversion, yes.
Tech loves it. Like, you tell a tech investor that, there's a 1% probability of this technology, or even a 0%, yes, this is what I want, take $1 billion check. Not in mining, and rightly so. We have history, right? And so what would it take for Africa to actually harness this opportunity that you talked about, external policies creating? For me, I simplify it this way, right? If you and I were investors and we landed in a country in Africa, let's say Congo, for me, the first thing, for me to make a decision whether I'm going to drop my capital in here, is your airport. In other words, a proxy for your infrastructure.
Yeah.
If I land at the airport, I want to be able to have a good road to take me to my deposits.
Yeah. So infrastructure.
That's number one. Number two, Africa is not short of tier one deposits, so I'm not even going to worry about that. But then
Yeah.
to be able to harness that, you need to do more drilling,
Yeah.
more ore body discovery. So the second thing is African governments need to have a skin in the game by unlocking more deposits.
Yeah.
You've built the infrastructure, you've unlocked the deposits. Now we need good and stable policies to be able to now move us from discovery to production.
Yeah.
And that means certainty of tenor. It's very important.
And the
For
same
long-term
sensitivity to local community,
Correct.
because otherwise there's no upside.
lose it.
Yeah.
You lose it. So good point to certainty of tenor and then communities as well. So now you've developed that mind. What happens next? You need infrastructure. You need railway to the port that enables you to export or transport that raw materials.
Yeah.
So energy and rail infrastructure and port infrastructure. So you put all this together. One, you get to the airport, you have a road that takes you to the mine. Two, the government has actually co-invested in unlocking the ore body. Three, there's certainty of tenor and good policies to enable you to convert that deposit to a mine. Four, you've got a very good working relationship with the communities. It takes a lot of co-investment from both government and producers. Five, there's a railway that enables you to take your product to the port. Six, there's support. Seven, there's a market for you. If Africa can guarantee this 7 things,
And security. Yeah.
of tenor, it will take 7 years and we'll see magic happen. And it will be a similar story we saw with the Middle East with how they used their oil boom to deliver broad-based prosperity for the people.
Correct. That's a good example, the Middle East. Africa needs a Middle Eastern revolution, if that's truly to be undertaken.
That could mean a lot, though. But
Yes, it could mean a lot for a lot of people. That's been a fascinating discussion. A final last point that you would leave for our investor community, friends, any summary. Is it the future? Your take on that, and how should they, what your best picks, and then also, if you would, how people, if they want to talk further on this topic, can engage with yourself or through your reports or Bloomberg.
Yes, thank you very much. So I think it's two things, right? We're in a very defining moment, especially for the investment community, and it's very rare that people get to live through a transition in an energy system, right?
Yeah. It is unique indeed.
Very unique, right? We moved from using whale oil to power our lamps into getting oil from the ground, and then somewhere along the line, coal came, and then somewhere along the line, we moved to gas, and then now we move into something total. Like if 10%, 20% of our energy reliance is renewable, that is a significant upside for mining. Then it's important to not just understand supply, it's important to understand demand in order to be able to sort of protect your investment, but then have a return on your investment. So understanding supply is not enough, understand demand. Like I said, some commodities, just like five fingers, are not the same. Some commodities would offer more opportunities than others. And we talked about copper, the aluminums, and the lithiums. Next is about understanding the jurisdiction you want to have exposure in. It's equally very important. And then following where capital goes, right? So I think, so it's going to be nice. It's going to be great. We saw in the iron ore industry how Australia came from pretty much an insignificant producer to significant producer as a result of the China growth, but then also they being able to take a low grade region like the Pilbara and turn it into a unique product. And it created a lot of, I would say, illionaires. It created a lot of returns for investors as well. And I think we are also at that point. Which region is going to be the next Pilbara for lithium? Which region is going to be the next Pilbara for copper? And I think those are the questions that collectively we need to engage to find answers to. So for me, I'm on LinkedIn, Kwasi Ampofo, KWASI, Ampofo, AMPOFO. I'm on Twitter as well, KD Ampofo, which is my surname. And let's continue the conversation. And hopefully, we would have transitioned the world, make it a better place for the next generation, but then would also make returns on that journey.
That was a great closing, by the way. And it sounds like the future for mining is actually, rather than being dead, pretty well assured in a responsible way, though.
Long live mining, indeed.
Yes. Thank you very much. I appreciate it. All the best.
Tired of profit wipeouts and blown accounts from following trade signal groups? Looking for a better way to trade? Why not be part of a principled, structured, and technically based community set inside a unique trading methodology? Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser or app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time, and with focused effort, you'll begin to look at charts, price action, and markets in a whole new light. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.